Hey guys, another execution shortly after we just reviewed another trade here where we were targeting that rejection block on the daily chart. So you can see the reason why I was telling you in the previous video. I don't put my limit order to take me out at the very level. You can see it failed to hit that rejection block and rejected quickly. You can see that wick, and I'm showing the consequent encroachment of that wick as well. I was watching that to see whether it is still strong. It still has the strength to go and hit the rejection block, but it has failed to do so. It has even failed on the premium wick, on the lower wick, because you can see we have 2 wicks there. So I've annotated we failed to print a body closing above the premium wick consequent encroachment. So if the bodies are not able to master the strength to close above that level, what does that tell you? It's weak. So now I was watching that fair value gap, which I wanted to see whether we'll use it as an inversion fair value gap. So my entry was just at the lower end of that fair value gap, because now I'm looking at it as an inversion to send us lower. You can see I'm annotating the lower one as well as an inversion, even before it becomes an inversion fair value gap. So far we've seen some sensitivity there, but that again is giving the wrong signal to guys to think that it will buy. I don't think it will, because you can see inside that fair value gap, the inversion, again we failed to touch the consequent encroachment. So this is how we measure strength or weakness in the marketplace. No need for indicators, no need for anything else, just watching the candlesticks and the narrative that Michael has taught us over the years. So how I see it is that buyers have been enticed to buy when we saw that pop higher. So now what that means is they are trapped long, and it's going to reprice aggressively lower now to go and take out their stop losses. Because where do you think they've placed their stop losses? Where did this move originate? Down there where I've annotated sell side liquidity. So below those lows, guys will have put their stop loss orders there, and the market will go for them. So what I was watching to see whether we'll close below the consequent encroachment of that discount wick there. I'm more interested in that over the fair value gap that I want to see used as inversion. Because remember what Mike has been teaching us. Wicks take precedence over imbalances or inefficiencies. Wicks are gaps. They are actual gaps. So I've taken a partial there, you can see. So once a partial is booked, it's always prudent to remove risk on the trade. Now we sit back and enjoy and see whether it will run and take out that sell side. So this is a 5-minute chart, by the way, not my usual 1 minute. The reason why I took that partial there is because we have a daily level, you can see that blue line. So now we are in striking distance to get to that sell side liquidity pool. So the reason why it drops aggressively is so that it doesn't allow traders to pull out the orders or to close a trade, so that it just goes to their stops like that.